day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for Wednesday, the 4th of September, 2019, just after 3:20 p.m. Central Daylight Time. Interesting day. Beans up 7, a breakout on that chart formation, what we had that wedge, I'll show you that in a minute. Wheat up 7, corn still laying down. New lows on the move, still unable to bounce. Energy markets on fire as China, mainland China, has given way to Hong Kong and removed the extradition bill. And all of a sudden, in part, that, along with what's seeing going on in the United Kingdom with Brexit, seems to be putting a risk-on mentality back in the market as the dollar dropped, metals up, and I mean metals up big if you take a look. What got into silver? I don't know, but that's a heck of a run. And that's going hand in hand with the stock market, which, as you can see, is at the highs of the day, literally, as I'm talking. So as we come back to the weekly area chart of closes in the soybeans, the resistance comes in here at the 866 level. And remember, a weekly area chart of closes is a continuation chart. So you might get in August, a September, then in November. You know, the different months just roll one to the other in it. When you, though, go to the daily bar chart of soybeans, we have been pointing out that this market had been narrowing in like this, and I'll call that a wedge. And if the market can stick its head out and finally get over and stay over that downtrend line, oftentimes, not always, but oftentimes, until you get back under this low, it signals the market might be breaking out to the upside. Well, you got what that did today. You closed at 875.5, certainly a good, strong close. In terms of swing lines, and what swing lines are, they're these lines, if you will, the bar charts, connected, making a line to either the day's high or low, depending on the formula. And the formula is quite simple. You're looking at inside days, outside days. You're looking at higher highs, lower low days, and outside days up or down. So it's 5 different elements, but the way that it works here, and I teach it in the charting course, you've got higher lows, higher highs, and so often that's what trades look at. You can tie together stochastics, MACD, all kinds of moving momentum indexes, but at the end they're all looking what is the chart pattern doing as well. And I see the momentum here, what? In terms of the trend, it's up until you take out 859.25. Now, where the market had tried to get up and over, we fought a battle here for a few days, getting to this 18-day average. Today, you were able to get over it and stay over it. So, yes, on pullbacks, I wouldn't be surprised if the 18-day average becomes what I call that line in the sand where the battle's fought. If the market lifts up, the first resistance in terms of moving averages is 889.25. To break the chart pattern, you have to take out this 859.25. What about next resistance levels? Could be the combination of Bollinger Bands. They happen to be right together at 889.25, 889.5. So if this market decides that, yes, it can lift itself up, that becomes a potential number. If the market gets under 859.25, well, support probably, I would say, comes in at the lower Bollinger Band in terms of momentum up. So we've got the trend up as defined by the swing line. The bias is up because you're over the 18-day average, and momentum up. In terms of the meal market, back to the 18-day average, and it keeps fighting a battle. It's not certainly as friendly a chart as the soybeans are. You have a higher high and low pattern. Can't seem to muster anything one way or the other. The settlement today was just under the 18-day average at 298.70. And the soybean oil market down 10 as it's now 2 days in a row been fighting at that 18-day average. And you'll hear me say so often, from that 18-day average is where the market decides what it's going to do. In this market, the swing line is up, but the bias is down. And bias is down because you closed under the 18-week average. The two fight each other. Support back at 28.58. If you can close over 29.05, then I could argue that the market's got both bias up, momentum up, and trend up. In the corn market, you're just extending the loss, and this is in large part why. When you get that embedded slow stochastic reading, it's when momentum shifts its gear from being oversold into just locking in, going sideways. It's very, very powerful. When it's lost, price and the 18-day average often make a run at each other, but they're really tracking pretty close anyways. In the wheat market, you got a nice bounce off the lower Bollinger Band. The first time you hit that, and I'll show you this, in a number of days had been here. And you don't often hit or have to hit it, but the trend has been down in the wheat, and you can see how it stayed under that 18-day average. It finally got back down to that number in an oversold condition, and you're getting a bounce. A bounce is not a trend change. The trend is still down. The resistance, 473.25, but it's a very oversold market. I don't know that the bears are going to get too aggressive with it. In the sugar market, we were just talking yesterday that we wouldn't be surprised, lower Bollinger Band offering some support. It's there. Now, I've got my eyes on this slow stochastic. Both numbers today are under 15. Yesterday, they were both numbers are under 20. Yesterday, both numbers were under 20, not the day before. So the fact that you're down to a lower Bollinger Band in an oversold condition, this market has to prove itself. I think the pros probably coming out of positions, waiting to hit the market on a rally. If it just accelerates from here, it gets much more bearish. The odds don't favor that, but that's just the odds. The trend is down, the bias is down, you're oversold. In the coffee market, resistance continues coming in at the 18-day average of closes. You see that red line? The pattern has been one of lower highs and lower lows. Now, today's high got to 96.95. This high was 97.20. The 18-day average, 97.03. You negate the downtrend if you can take out 97.20. So I think that's the number that those that are looking to end this downtrend will be looking at. The bears still have control, but you've had divergence. You've had momentum pushing up, the bias down, and the trend down. I see divergence in that. In the cocoa market, we had just talked as this market came up that this was the first close over that 18-day average with the swing line having turned back up, momentum up. Put in the line the upper Bollinger Band as potential resistance. It went there, and that's where it found it. It finished 22.69. The upper Bollinger Band, 22.73, and 22.90 was the high. Support now back at the 18-day average, 22.21. You are overbought. You've got a 70 reading in the slow stochastic, so I don't know that the pros will be super aggressive in an overbought condition to try to support anything. In the cotton market, this sideways action gets me excited. It's the kind of action where you get breakouts one way or the other from. Temporarily, you certainly have the lower high, lower low pattern. Resistance, 58.87. You close 58.21. Now, I will be the first to tell you that until you break out of it one way or the other, you can bounce around in there rather nasty. In the cattle market's got momentum that's been correcting an oversold condition. You can see that here. We also had an embedded reading way back here that was lost, and prices made its run at the 18-day average feebly, but it made its run there. Even if you were to get over right now, this 155 level, you'd have a lower low and a higher high. Therefore, the position that the bears would want is to not let it get there, try to drive it through 96.47, keep that pattern of lower highs, lower lows, and see if the market's made out of anything. Their problem is one of the numbers is oversold, under 30. Any readings under 30 on either of the numbers is oversold. So while that sounds pretty, it's still an oversold condition. In the feeder cattle market, battleground is the 18-day average of closes, and it's been that way for quite a while. You can see how you've run up to it a number of times here and just didn't go anywhere. Let's assume it does go somewhere and the market's able to pick itself up. Well, you'd have to get over 135.25 in order to start something to the upside. That would negate this pattern of lower highs, lower lows. Momentum, flat here, not giving us an edge one way or the other, but I think any move over that ends this phase of the bear market. Barring that, if the market, instead of taking out that high, goes through today's lows, you keep the bear market very much alive. In the hog market, as I said earlier yesterday, I think this market has turned the corner. You've got the higher lows, you've got the higher highs, you are overbought. You don't have to reach for the upper Bollinger Band, you've already come very high up. I wouldn't be surprised if ultimately you try to fight a battle at that 18-day average, but it's looking more and more to me like a low in hogs is coming into place here. As you can see, the stock market's still doing pretty good. You know, one of the things we try to teach you here are technical trading ideas and work with you. Our good friends at the old Modern Trader magazine had put together this technical tips from the pros. Gantt squares, benefits of relative strength, think of stochastics, relative strength, money flow indexes, rules for bottom fishers, and the articles look like this. They're full of graphs. They give you an idea of what's going on in these markets, and I find it very fascinating when you look at these, whether you want to computerize them or not. I think the ideas here are really worth you looking at, especially optimizing stops. Does that even work? How do you work with this all? Give us a call. You can go to our website and you're going to see under free offers. Click that. It'll take you to the technical tips for pros. Fill out the form, check that off, and we'll get it into your hands, and plus our other offers if you want them. Or you can click up here and it'll take you right to that page. I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow.